Capital.com, $20 minimum, FCA regulated. Sounds too good to be true? Here's the honest answer. $20. That's the minimum deposit at Capital.com, and it's regulated by the FCA in the UK. Stop and think about that for a second. Most brokers that let you start with $20 are offshore only. Seychelles, Vanuatu, somewhere your money has no statutory protection. And most FCA-regulated brokers want at least a couple $100s to open an account. Capital.com sits in the middle of that Venn diagram, and that's why first-time CFD traders keep landing on it. So here's what you actually need to know: how that combination is possible, what the hidden trade-off is, and which of the 6 regulators on the marketing page actually applies to your account, because that last one matters more than the headline number. Capital.com was founded in 2016. That's a flag, not a deal breaker. IG has been around since 1974, Saxo since 1992. Capital.com is 9 years old, but in those 9 years, it's built up over 6 million registered users and stacked regulator after regulator on top of itself. FCA in the UK, firm reference 793714. CySec in Cyprus, 319/17. ASIC in Australia, AFSL 513393, plus the FSA in Seychelles, the SCB in the Bahamas, and the National Bank of Belarus. 6 licenses. Sounds bomb-proof. Here's the catch. 6 licenses does not mean 6 layers of protection on your money. You get the protection of the entity that holds your account. One entity. So if you sign up from the UK, you're under the FCA, and the FSCS covers you up to £85,000 if the broker goes bust. If you sign up from the EU, you're under CySec, and the ICF covers you up to €20,000, about a quarter of the UK number. And if you end up onboarded to the Seychelles or Bahamas entity, you're not covered by any statutory compensation scheme at all. Same broker, same logo, wildly different safety net. Check the entity name on your sign-up confirmation before you fund the account, not the website, the entity. Okay, regulation. Real, but read the small print. Now, what does it actually cost to trade? Capital.com runs on spread-only pricing, no commission per trade. Euro-US typical spread sits around 0.6 pips. That's tight for a beginner-tier broker. The real reason it's tight is that spread-only means the broker's cost is baked straight into the bid-ask gap. You pay it on entry, not as a separate line item. That's actually simpler for a first-time trader, because your cost per trade is one number, not 2. Where spread only stops being cheap is overnight financing. Hold a leverage position past 5 p.m. New York time, you pay a swap charge. Hold it for a week, those charges stack. So this pricing structure quietly favors intraday traders. If you're swinging positions for 3 or 4 days, your real cost is the spread plus 3 or 4 nights of financing, not 0. The good news? No inactivity fee on the latest published schedule. Deposit $20, walk away for 6 months, they don't bleed the account. That's rare in this category. Platform. Capital.com built their own, and it shows. Web and mobile, both proprietary, both clean. The mobile app pulls consistently strong ratings on the App Store and Play Store. The design is modern, not the cluttered 90s spreadsheet feel you get on legacy desktop platforms. It was built for beginner to intermediate CFD traders. End of story. If you already trust MT4, you've got an expert advisor, a template, a workflow. MT4 is supported. If you live in TradingView for charting, that's integrated too. What's not here? MT5 and cTrader. So if you're a scalper running cTrader for depth of market, this isn't your broker. The headline feature is Investmate. That's their built-in AI tutor. It surfaces educational content and trade context inline. So when you're sizing a position, it nudges you with the why behind the move. For a first-time trader, that's genuinely useful scaffolding. For a 5-year veteran, you'll turn it off in week 1. Know which one you are. Now the catches. There are a few real ones. Capital.com is CFD only in most jurisdictions. That sounds like a technicality. It isn't. It means you never own the underlying asset. You're trading a contract that tracks the price. For Forex and indices, that's the normal way retail trades anyway. For shares, it's a different story. If you want to buy 100 shares of Apple and actually own them, vote at the AGM, hold them long-term in a tax-sheltered account, Capital.com is the wrong broker. They give you Apple CFDs. Different product, different tax treatment, different rights. US retail clients, not accepted. If you're trading from the US, stop here. This isn't an option. Leverage caps. EU and UK retail clients are capped at 30-to-1 on major Forex pairs. That's not Capital.com being conservative. That's ESMA and FCA rules, identical at every regulated broker. If you want higher leverage, you need to onboard to a non-EU entity where it's locally permitted. Which brings you back to that entity question from the start. Higher leverage means weaker compensation cover. Pick one. And the spread. 0.6 pips on Euro USD is tight for a beginner tier broker. It's not tight if you're a scalper. The raw spread brokers, Pepperstone, IC Markets, give you sub 0.2 pip pricing plus a flat commission. Cheaper if you're trading 20 times a day, not cheaper at 3 trades a week. Match the broker to the style. So who is Capital.com actually for? Open the account if you're a first-time CFD trader, you want FCA, SciSec, or ASIC backing on your money, you can only fund $20 to $100 to start, and you'd rather have a polished app than a learning curve in raw MT4. The Investmate tutor will speed up your first few months. Walk away if you want to own real shares. Go to a stockbroker, not a CFD broker. If you're a US client, not eligible. If you scalp the majors 20 times a day, go raw spread. If you only trust a broker with 30 years of operating history, Capital.com is 9 years in, and that's a fair concern, even though the regulator stack compensates for a lot of it. Final verdict, 8.6 out of 10. The score sits there because the regulatory footprint, the $20 minimum, the 0.6 pip spread, and the clean platform stack up genuinely well for a first CFD account. It doesn't sit higher because the operating history is short, the product range is narrow, and that entity question, the one I flagged in the first 60 seconds, is something you have to verify yourself before you fund. Same logo, very different safety nets. Get that one right, and Capital.com is one of the better front doors into CFD trading in 2026.
Capital.com earns 8.6. Strong first CFD account if the entity fits. Full breakdown in the description.